One of the interesting omissions in those sanctions that they passed is they're not restricting the export of crude oil and natural gas. So we need to stop Russia through war efforts, which is ultimately what sanctions are, right? If you imagine, like, there's a better way to imagine a sanction, because again, the government and the media, they work together to make everything confusing by obscuring things with language, right? What is a sanction? Well, let's do a thought experiment with an island instead of with a giant country like Russia, right? I'm part Jamaican, so I'll use Jamaica as the island, but any island will do. Cuba is actually a good example because it happened in history. If I was on Jamaica and I decided, I don't know, whatever, we're going to war with America or whatever, and they say, hey, we're going to sanction you, Jamaica. Okay. Well, what would that physically look like? Right. Well, it's called a naval blockade. Right. You can look it up if you've never heard of such a thing. It's called naval blockade. These have happened all throughout history. And what you would do is America would sail their navy down to Jamaica and they'd park their boats off the shore and they'd shoot anything that tries to leave the island or anything that tries to get to the island. And sure enough, we've now imposed sanctions. Nobody will be trading with you, Jamaica. Now, you explain to me how that is not an act of war, right? How that's not a hostile act. Like, we're pretending right now, the media and so on and so forth, that the United States, the West, whatever, that we're not being aggressive towards the Russians. But again, like, a sanction is a blockade. Like, granted, you didn't have to park the boats off their coast because you've come up with a different place to put your guns to stop the money and the food and the fuel from flowing. But all the same, that's what you're doing, right? So we're being very dishonest about what is going on here on all sides. I have no idea. I couldn't tell you if Russia is right or wrong, if we're right or wrong, if anything. I can tell you this much. The media that was telling me things that are demonstrably false just a few weeks ago is now telling me things that I don't know if they're false or not, but they certainly weren't very good when I was able to determine whether or not things were true. So who knows what's happening now? Who knows? But interest rates have risen, right? 100%, in fact, right? We went from a 0.25% to a 0.5%, or an increase of 25 basis points, because again, the media likes to make things confusing, right? A basis point is 1/100th of a percent, if you weren't aware. So when you hear something goes up 25 basis points, it went up 1/4%, right? We went from a 1/4% interest rate to a 50% interest, to a 0.5% interest rate. My apologies. Which again represents a 100% increase, and that's very, very scary. 100% increase. And technically, if any of us did actually get to pay the prime overnight rate, then we would have seen our payments double, and that would hurt, right? None of us pay that rate, so we're not hurt by that. Only banks do. So banks are hurt by it, and boo-hoo. For your average investor, it doesn't really make much of a difference. Now, when you go to get a loan, of course, you're going to be quoted slightly higher rates because they have to pay slightly higher rates. So obviously, your cost of borrowing has just gone up, as has everyone else's. So really, in the status quo, nothing's changed except the price of houses is about to fall a small amount, right? Essentially, I did some analyses yesterday. You won't see them because they weren't for investment properties, but I was analyzing some properties yesterday, and I was having suggested interest rates of like 2.25%, 2.5%. So if you're doing your analyses correctly, right? If we're sitting down and we're looking at a property and we're analyzing it correctly and we're doing our due diligence, right? We're checking information like our tax information, and we're checking information like what our rental market looks like, and we're finding out what our vacancy rate is, right? And of course, we're calculating what our mortgage payments are going to be and how much capital recapture we're going to have. And we're going through all of the numbers, right? Then at some point, we're going to have to account for A, passive appreciation, right? And of course, B, our interest payments, the mortgage payment, right? Pity. If you're doing these things, then this bank rate increase meant absolutely nothing to you. Because I was analyzing my properties. When I was showing you analysis, I was analyzing my properties at between 2 and 2.5%. Right? Yes, I could go out and get a mortgage for 1.5% or 1.75%. I was analyzing at 2 to 2.5%. Why? Because I leave a margin of error, right? Because it is not always clear that the interest rate is going to stay where it is. In fact, we know that it's not going to, right? So I always analyze with the assumption that I would pay a bit more for the money than what I was being quoted on that date. So for me, and any analysis I've done, any analysis that you've seen that I've looked at, and hopefully any analysis you've done on your own, you weren't analyzing at today's spot rate, right? Because that's silly, because you've got 5 years, you're stuck with this thing. So you analyze it, assuming maybe not the worst case scenario, but also not the best case scenario. And in doing so, you already positioned yourself so that you were ready to absorb the cost of this increase. In fact, you put yourself in a position where maybe you're ready to absorb the next 100% increase to take us from 0.5% to 1% overnight interest rate, which of course will nudge up interest rates, the actual market interest rates that we see, to closer to 3%. So that's the thing. It occurs to me that, see, I wrote such a good email. Damn it. And I had the thing I wanted to say, and now I want to say the thing anyways. So I'm going to share this with you. I hope it's not too much. But everything unexpected is a crisis to the unprepared mind. Because luck is what happens when preparedness meets opportunity. And opportunity is all around us. Now, that is a jumble of cliches. There's no question. There's no question. It's a jumble of cliches. But they were very mindfully constructed. And the reason is very simple. As I've talked about before, and I hope, just as an aside, I really hope that that you don't feel that I harp too much about kind of the media and some of the things that are happening that are slightly less real estate related, because I really want you to understand how it's all tied together, in the sense that your mindset is kind of the linchpin of where you're going to go as an investor. It determines how much action you're willing to take. It not only determines how much action you're willing to take, it determines which actions you think are takeable and which ones you think are out of bounds, so to speak, that you can't take or you shouldn't take. And so mindset's very, very important. And this is a well understood thing by the people who understand these things, right? And the media is very much interested in, and there's a lot of reasons for this. And I'm not saying that there's some nefarious person who's like sitting on a throne somewhere clicking their hands together. It's not like that. But for a variety of reasons and just the way the incentives end up working out, the media is very much in favor of you being passive. And you being passive requires that you be ideally confused, uncertain, and unconfident. Okay, and that's why I'm pointing out to you, like, the language that they use, they will use language that is confusing and that obfuscates the truth. Because if you understand what's going on, then you can take a stand and say, no, this is right, this is wrong, I don't agree with this, ignore it, etc. Right? But when you don't understand, that's when you need to come back to them for more information. Right? When you're confused about something, you need to read more about it or watch more about it or talk more about it so that you can come to an understanding on it. Right? When you understand something, there's nothing more to be said. Right? Like we don't need to sit down and have a conversation. And we don't, for example, right? There is no seminar, not just myself, but probably anywhere in the world, that explains how to hammer nails in the wood. Right? Because once you understand how to hammer a nail in the wood, right? Like, yes, it is a skill you need to learn, but once you've learned it, there's no more discussion that is necessary. It is now learned and understood, and we're moving on. Right? And this is the way many, many, many things are in life, right? Once you've learned something, and really learning something is not sitting down and listening to me. It's not writing out notes, right? For those of you who've been to university or college, right, and you've gone through those programs, like, that's not learning. Learning is when you do something, right? That's why hammering a nail is a good analogy. I could explain to you how to hammer a nail and then give you a nail and a hammer and you'd smash up your thumb. That's probably what a lot of people would do, right? Especially like if you're a kid, which is the age when you learn to do these things, right? No, the skill is in the doing it, is in the application, right? Is in the learning. And once you've done that, you don't really need to talk about it anymore, right? The media is very much interested in that sort of awareness phase and in making you aware of things, but as confused as possible, so that you'll continue to come back. It's good incentive for them. Look at this Ukraine situation, right? Hopefully none of you fall in this category, but there are people who've gotten up every single day today to watch CNN or CTV or whatever about the Ukraine situation, and they go to sleep worried that they're going to be nuked and that we're going to be in full out total war with Russia tomorrow and blah, blah, blah. There are people like that. It's true. I don't know if you know any of them. I Unfortunately, I don't think I do, but they exist. And you met the people before, right? The true COVID believers who they're sitting there with 3 masks on, driving to work in their car alone, but they still had the masks on, just afraid to leave their couch or look at their shadow. This is what happens, right? This is something, there's something called the Gelman amnesia effect. There was a study done by this individual, last name Gelman, and there's a psychological study, and they found this Gelman amnesia effect. And essentially what the Gelman amnesia effect tells us is when we look at things that we understand portrayed in the media, we will see the holes in the media's reporting, right? That is, if, for example, you now go back and look at the articles that were written about the interest rates this week, and you come to them with the full understanding of what an interest rate is and how an interest rate is supposed to function in the market versus what is actually happening in that market, you will see that the article is completely wrong. It's written by an idiot who knows nothing about economics, nothing about fiscal policy, nothing about monetary policy, nothing about money, finance, investing, anything. It's a writer. That's what it is, right? You'll see that immediately. And you'll go, oh, yeah, they weren't very good on this article. And then you'll flip the page to something that you don't understand as well. I don't know. Something I don't understand very well is women's gymnastics. So I'll flip the page over to women's gymnastics, and they'll tell me some story about blah, 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 I don't know, doping in women's gymnastics or whatever, something. And I'll go, oh, wow, that's awful. And I'll just accept it as truth, even though I've seen very clearly that within the domains that I understand, they don't get things right. But then I'll immediately move to domains that I don't understand, and I'll take their word for it. Right? And this is a very, very dangerous thing. It's dangerous for an investor for sure, because investing is in part the skill set or activity of wading into environments that you don't understand and becoming comfortable with them, right? First of all, there's learning to invest just from the beginning. So if you're here to talk about real estate investing and analyzing a property, right? And we're going to go through that property and understand what cash flow is and what PID is and what property taxes are, and all the way through everything you need to understand to run it as a business and not just own it as something that costs you money. Then that's really, really good to have, right? All that information you're going to run through and you're going to understand that thing. But there was a time when you didn't understand that. You had to dive in and learn those things, right? And now that you know those things, then you come to market selection, right? Well, okay, now I know what I'm looking for in an investment, but now where do I find it? And of course, if you're like most GTA investors, at least the relatively young ones, you might look around and say, well, this Toronto GTA, whatever market is really, really hot. I don't know that I can invest here. And if that's the only market you're now on a journey to go learn about a new market, right? Maybe you're going to learn about Kitchener, Waterloo, Cambridge, or Hamilton, or Windsor, or Sudbury, or Sarnia, right? And so now you have to dive into this new environment where you, again, need to learn things, right? What is the vacancy rate? What is the tenant profile? What are the market rents, right? These are all things that you're going to want to know as an investor about this market. Now, you could move into that market with the mindset of, oh, I'm just going to take information as it's given to me. I don't know anything about this place, so I'll just take what I'm given. And then you could read some newspaper articles or what have you that are telling you, oh, I don't know, Sarnia is the armpit of Ontario where 33% of people are addicted to fentanyl and blah, blah, blah. I don't know, whatever they might say. I'm sorry, Sarnia people. I don't know what's going on in your community. But let's just say the articles would say that, right? I'm sure they wouldn't be positive because Sarnia's got a bad rap right now. Does that actually help you make an informed decision about investing in real estate? Let me tell you a quick aside, a real brief aside. I have a great aunt. She's passed away, so she's not with us anymore. But my great aunt Beulah, she was a lady. She was a sister of my grandmother. She was a lady. She grew up in Jamaica. Poor family, not a lot of money. And she, at a young age, migrated from Jamaica to the UK. This was in the 60s when a lot of people were doing that. This was a common migratory pattern at the time. Kind of like today you see a bunch of Indian people. It wasn't like that before. You used to have a bunch of Caribbean people. That's the old group who used to do that. Anyway, so she was part of that group. She migrated to the UK, and like as a young woman, like 18 years old, kind of thing. She went to UK, got pregnant, being a dumbass, and had to go back to Jamaica, have a child. She had the child, and fortunately, my family or her family, whatever, were able to support her. They were actually able to raise her daughter, basically for her, and so she was able to go to university, get an education, blah blah blah, whatever. So fast forward, she ends up being able to leave Jamaica again, go back to England, and things aren't as good in England as they were. So this time, she decides going to America, moves to America, New York City. And in New York City, she pursues more education. I can't remember what. She becomes some kind of chemical engineer or something like that. Ends up working for the city, enforcing like health codes and stuff like that. She makes a decent living, nothing crazy, but she has an okay life. It's maybe slightly above average pay, even, right? She goes on, she takes that money and she invests in Brooklyn, New York. She bought a house there for I think for like $100 and something thousand, and she bought some condos. And anyways, this was, early 90s, late 80s. And she does this. And for those of you who aren't old enough or you don't read any history or anything like that, New York was a bad place at that time. It was not the New York of today. It was scudsy and just grimy, and a lot of crime and violence. Obviously, you're in like the middle of the crack thing and whatever. And so New York was a lot rougher city than it is today, right? And people did not really buy things, certainly in Brooklyn, because that was kind of ground zero for a lot of this stuff, right? Bad stuff, I mean, especially bad brown people, right? might be your acronym, bad brown skinned people doing bad things. And so there was a real depression in prices in that area, let's say. Anyways, my great aunt invests into this. And, maybe she does so because she's stupid and she doesn't know any better. Maybe she does so because she's smart and she knows more than everybody else. Who knows what the real reason is? I don't know. She's dead. I can't ask her. But she decides to invest in this property. And I guess she knew something that other people didn't know. She knew one thing. She knew that investing pays off, which is a very important thing to know. It does, usually. And you get a lot of people who they're not so interested in actually doing the work of investing, who it's not paying off for them. They're always looking for the short thing, the quick thing, the easy thing, the flip thing. People like this, right? People who've come to you, right? Maybe they know that you're into real estate. Maybe they know you've been into real estate, whatever, and they come to you and they say, "Oh man, these prices in Toronto, they're so hot. I mean, you can buy a house and for $1 million, you can flip it for $1.3 million 6 months later. It's amazing. I want in." Right? Is that what you're doing? Oh, I'm making so much money. There's a lot of people like that, right? You see it with the stocks too. When the stock market was hot last year, you had all these friends coming out of the woodwork. "Oh, I'm a genius. I'm so smart. I'm in the stock market. I'm making all this money, blah, blah, blah. Fast money, quick money." And the problem is, of course, there's no consistency with any of these people, right? So maybe they do make a quick, I don't know, $5,000 on the stock market or something, or they do a quick flip on the house, right, one time. But they don't establish the routine, the pattern, the habit. It's not growing wealth for them. It's not really getting them as far ahead, right, as you'd like to be, because there's no consistency there, right? And so you have a situation where a lot of people are attracted to the quick thing, but not doing things the right way, right? And so when you're attracted to the quick thing and you're not interested in doing things the right way, when the market turns on you, you get burnt, right? When you're interested in doing things the right way and the market turns, well, to come back to my Aunt Beulah, right? That's what happened is in the 90s, Mayor Rudy Giuliani cleaned up the city. It's not exclusively him. There were a lot of factors. I'd never give a politician too much credit, but he helped for sure. He helped to clean up the crime. The people took care of the rest. And the city really was revitalized and rejuvenated, and Brooklyn became a very desirable area. And so my aunt, my great aunt, ended up dying a multimillionaire because of the investments that she'd made. And again, you have to understand that like she wouldn't have invested $500,000 probably over the course of her lifetime. Like did not have that much money to invest. She bought a house. I think it was like $130,000 or $124,000, something like that. She bought a condo. I think it was maybe like $120,000 or $150,000. Like it was a bit more expensive because it was after the house. And then I think there was another property. That was it. Like, it was nothing crazy. But her house, just to give you an idea, her house is 2 blocks down the street from the Barclays Center in Brooklyn. So that house, which she paid like $134,000 for, is now steps away from basically downtown Brooklyn, Brooklyn, New York, right next to the Barclays Center. And it's, I don't know what it's worth. I don't know what her daughter's done with the place in the last few years since she passed away, but I'm sure it's worth multiple millions of dollars, right? So this is one of those things where we have to be very careful about our information and our knowledge sources, and about what they allow us to believe, right? Because my Aunt Beulah, I'll tell you, right? Like, you might think, oh, well, Aaron, that's a part of where you get. No, me and my aunt, we never discussed real estate, investing, finances, any of it. Didn't have much of a relationship with her. I mean, she lived in New York State. I lived here, and she was a great woman. And the little bit of time we got to spend together was lovely. But there was none of that was the focus, right? So I didn't learn any of this from her. She didn't teach any of it to me. And really, I mostly learned about what she did after she passed away. So unfortunately, she wasn't an influence on me in that regard, right? She wasn't particularly knowledgeable about real estate investing or about investing generally. She just had the wherewithal to know that it was a good idea, and she took action on it, and it paid dividends for her, right? Today, to go back to what I was saying, a lot of people are looking for that quick buck, that quick return, that easy money, so to speak, right? And when you're doing that, right, if you're going into a market like the GTA right now, and you're seeing houses that are going for, well, here, I'll tell you about a deal right now. This is a real world deal. I actually went to make an offer on this property. This is a Sudbury property. The property is 94 Dell Street, and it's sold now, so you can't participate. But it was listed 2 weeks ago for $244,900. It is a triplex. It's a 1-2-3 triplex, so 1 bed, 2 bed, 3 bed. And the main, I think it was the 2-bed unit, was owner occupied. So they were going to move out. It was going to be vacant. You had the 3-bed that was rented, and you had a 1-bed that was also rented by a man who'd been living there for 30 years. So chances are he didn't want to leave. Looked like he was pretty old. You were probably going to have a hard time kicking him out. I ran the numbers on the property. Property cash flowed at $244,900 for sure. And it probably cash flowed about $280,000. And I spoke to my realtor. I spoke to Brent. And he suggested the property would go somewhere in the $300,000 range. And he showed me some comps to justify his thinking. And I didn't quite agree with him. I mean, this is one of the things about realtors and professionals and like the people you're working with. They're human. And humans are lazy. I know I am. I bet you are. Maybe not always, maybe not in all things, but sometimes, right? In some things. And sometimes that laziness means making assumptions. Sometimes it means being a little bit sloppy. And I think that might be what happened here a little bit, right? So Brent was giving me a valuation probably in the like 350 range. And I was pushing back and saying, no. 280, maybe 300. I don't want to go past there. Anyways, I came to 280, and then I decided I didn't even want to make an offer because I figured 280 was the top price, and Brent was pretty confident that it was going to go for more than 280. I said, you know what? Let's not waste your time drawing up an offer then. Anyways, he got back to me because the offers went through. There were 6 offers made on the property. The property sold for $308,000 cash, no conditions offer. Right, so my 280 with some conditions and not cash was not going to make the cut, although $308,000 was not too bad, right? Obviously, if somebody looks at that market and they say you can list the property for $245,000 and sell it for $308,000, that's cash money. I want a piece of that, right? That's an 18% return or whatever, or growth or over asking price, right? And so you'll get people who get involved. Maybe they'll go buy that house now in the hopes that 6 months from now they can make that flip. And those people now are the same people who get burned by rising interest rates, right? Because they weren't doing their due diligence. They hadn't thought it through, right? It's kind of like I don't have a great analogy, but it's kind of like if you go camping, right? If you go camping, I don't know if any of you like to camp. I'm not super fond of it, but it's interesting. I like camping because you get away from having everything done for you. And it's a moment, a reminder to say, oh, what if I had to do everything myself? You know, build the shelter and stoke the fire and all the stuff, right? But it'd be like if you went camping. And if you went camping and someone said, oh, well, you got to be careful, right? Because, you know, there's bears and there's coyotes and there's all these various things, right? Well, I don't know, maybe every year some percentage of campers get attacked by bears, right? For sure, right? Are you the kind of camper who brings bear spray with you? Right? Or to use a better analogy, right? Like maybe you're going for a drive and people tell you, you know, well, drive safely because there are, you know, 30,000 accidents every year on Canadian highways or whatever, right? Probably more than that, but whatever it is. And that's a lot of accidents, right? Yeah, that is a lot of accidents. Oh, you know what? Actually, no. I'll make this point a different way. Statistics. We live in a society, in an age, and a time where people love statistics about everything. Obviously, we just went through 2 years of COVID statistics where the media and everybody was going crazy for statistics. And I think statistics are very funny. I had to study statistics in university as part of my economics program. You had to do statistics. It's just mandatory. And I didn't like it, but we had to do it. And I find it fascinating because I think most people don't have a very good understanding of statistics. It's very easy, right? And we do that a lot. We're very, very, very statistically oriented. So I want to just talk a little bit about statistics, right? So an example of a statistic is like, I don't know, 1 in 10 people will be assaulted this year. Let's just say that's the statistic, right? So that means you have a 10% chance of being assaulted this year? Well, that's not actually what that statistic means. Oh, I'll use a better statistic. I'll use the divorce rate. That's one of the best statistics because it's one of the most obvious examples of being misled. We have 50% divorce rate, so they say. So people will caution you, don't get married. There's a 50% divorce rate. You know, you have a it's a 50-50 chance that your partner is going to leave you, blah, 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 whatever. There's absolutely no truth to that whatsoever, of course. The divorce rate is 50%. That is correct. That is for every 100 divorces, 50 of them end in for every 100 marriages, 50 of them end in divorce. This is absolutely correct, right? What is not stated, of course, is that crazy woman who's going to get married 10 times, that counts as 10 marriages and 10 divorces. She's stacking up the rate of divorces. So when you say that the divorce rate is 50%, that is a correct statement. When you then extrapolate from that because the divorce rate is 50%, you have a 50-50 chance of becoming divorced. Well, that is incorrect because actually about 80% of our divorces, shock of all shocks, are 20% of the people getting married because the Pareto principle is always at work, right? And so statistically, I can tell you that the divorce rate is 50%, while still not actually knowing anything about how likely you are to get divorced, because I don't know the particulars of who you are and who you're married to, right? And without knowing that information, it's very, very hard to make that judgment, right? So it's the same thing here with the investing, right? We have a situation where, for example, people are talking about interest rates. Oh, the interest rate has increased by 100%. The sky is falling. Oh, investors are going to get burned. But that information in a vacuum is worthless, right? Like the interest rate in a vacuum is not worthwhile. It's what's the interest rate applied to and how much money does that thing bring in versus how much does it cost, right? Because at the end of the day, it's income minus expenses, right? And interest rate affects expenses. So knowing the interest rate means nothing without knowing what the expenses are and what it's going to do to them and how they relate to income. If I had a property that makes $100,000 a year and has $10,000 worth of expenses, and let's just say of those expenses, my interest, my debt service is 50% of that. So $5,000 a year is debt service payments, right? And I'm making $100,000 per year. If you quadrupled my debt service, right, it would go from $5,000 to $20,000. I'd now be paying $25,000 in expenses total. Okay, now I would make $75,000 instead of $90,000, right? It's meaningless without the context, right? So the context being, of course, the asset that's affected by the lending, the borrowing, the et cetera, et cetera. So interest rates are something that you're going to hear about because they scare people because your average person doesn't understand them. There's probably a lot of other pseudo-political reasons that you'd hear about them as well that I don't need to get into because they're more conspiratorial. don't worry about it too much. If you're doing your analyses correctly, you're going to be fine. In Canada, there are limitations on how much the banks can increase your effective interest rate on an open mortgage anyways. And of course, if you have a closed mortgage, then they can't move it on you at all for the 5 years. Obviously, and this is very important to keep in mind, interest rates are going to be a consideration when you go to refinance. They're just going to be, because they're going to cost you money. They're going to, because they may affect, dealing with the stress test. But in your 5-year term, they're really not something to worry about if you've done your analyses correctly. And again, just to reiterate, because it's so important, right, to understand this, is we're looking for properties, right? We're looking for properties that are going to perform such financially that they can afford, they can absorb an increase in interest rates. If you buy a property that makes $10,000 per year, and your cost of borrowing is, I don't know, let's say $2,000 a month, and now it's going to increase to $2,500 a month, that's an extra $6,000 a year, right? $500 every month. It's an extra $6,000 per year, right? But your property can absorb that because it's making more than that $6,000, right? That it's going to cost you for the interest rate increase. So yeah, obviously the interest rate increase is going to mean that you don't make as much money, right? And that sucks for sure, right? But it's not going to harm you, right? Especially if you're in a cash flow positive situation. Now, if you're in a cash flow neutral situation, which sometimes you might be because, the other streams are so attractive, right? Either the principal recapture or the appreciation side of it, it becomes more of a consideration because obviously you're making payments in that property, or you're trying to avoid making payments in that property, and increases in interest rates is gonna hurt your ability to do that. That's something that you have to keep in mind in that scenario. But otherwise, I wouldn't worry about the interest rates too much. I really wouldn't. And again, this is one of the things about preparedness versus unpreparedness, right? When you are, $500 away from being hungry, the interest rate increase might really affect you. When you're $100,000 away from being hungry, you might have enough cushion there that you can ride out that period of high interest rates without it ever really affecting you. When you're $1 million away, you don't care anymore, right? Within reason. I mean, if you're making good decisions and everything else, obviously people who have $1 million do go broke sometimes, and then they will care. But in general, right, this is about the margin that you have in your life, the margin for error that you have. And obviously everybody's in a different position, right? And if you're starting out, then the interest rate is both scarier and affecting you more so than it is if you've had a few years at this. But the more time that you're exposed to the market, right, then the more the overall market growth is going to work for you, right? And the more you allow the market to grow your net worth, and the more that you have that as something that can be leveraged, then the more of a position you're going to be in to say, I'm not too worried about this interest rate, right? Also, pardon me, just one second, my dog. Also, right, as you're able to grow your net worth, that gives you access to alternate strategies, right? I just said that property 94 Dell sold for a cash offer, right? Obviously, when you're first starting out, can I show you Dell? Do I have you? Yeah, I do have it here. I'm going to show it to you. Obviously, when you're first starting out, you probably aren't in a position to make cash offers, right? I would say $308,000 cash. $308,000 cash is pretty hard for most people to afford starting out, right? I guarantee you only need to buy one property in order to be able to afford that. Now, you need to buy one property, you need to wait a couple of years, right? It's not instantaneous. If you buy a really good property, 1 year, you can do it in 1 year. Like if you do a good BRRRR, 1 year, you have $300,000 cash. You could take maybe a $50,000 to $75,000 down payment around there, and you can BRRRR something and get out around a net worth of $300K. It's possible for sure. Maybe you want to be a bit more conservative, you do it in two to 3 years, right? But now that you have that $300K net worth, right, which you're going to access by refinancing, right, so that you can avoid paying taxes on it because taxes are going to slow you down. Now that you've got that $308,000, you can go to 194 Dell Street and you can make your cash offer, right? So here, let me just share my screen with you real. I don't know how to do that. I have too many tabs open. I don't know which one is. Here we go. So here we go. Sorry. Not a tab, the whole thing. You go to make an offer. Here, just the whole screen. You go to make an offer. Where'd this thing go? Damn it. Too much stuff on the computer. So you go to make an offer on this property, right? For $308,000. You can make that offer cash now because you have the money in the refinance of your house, right? So you can pull that money out, make the offer cash, buy this property. Notice cash is going to get you a discount, and cash does get you a discount, especially generally in life. Cash is king. Most people feel that way. Cash will often get you a discount if you have the cash on hand. Of course, most people don't have the cash, so they can't ask for the cash discount. In the case of a property like this, having cash means there's no chance of you backing out of the offer. Whereas if somebody says upon financing, there is a chance. So for people who are time sensitive, right, they may accept an offer that's 10, 20, maybe even 30, $40,000 less than the financed offer if it's cash, because they know their time is not going to be wasted, that this is a cash offer, they're serious, the deal's going to go through if I say yes to this offer. Whereas with the finance offer, it might be 2 months of being dicked around by the bank and then finding out that this person doesn't qualify, right? And then you're right back to square one. So a lot of sellers, and especially their realtors, are fond of cash offers because it's a done deal, especially the realtor. Like a realtor is on your team when you make a cash offer to them because that's their commission. They can see it. Right, they can see the commission right there. Whereas they know they've done this enough that they know, oh, I get a bank offer, conditional pending. 6 weeks later, back on the market. I'm back to work. I didn't make any money. Right, so you're gonna get the realtor on your side with the cash offer, and obviously things. So if I look at this 194 Dell, which went for a cash offer, and you can see here, right, 244. You can even see my analysis. I said it was $244,000 before I spoke to Brent. I said it was worth at least 300 because I figured there's no way. It was just too low. They were trying to get a bidding war going, and so I was actually quite surprised that they came back at 308 because I thought it was going to come back at like 340. so I'm surprised I was closer on the price than I thought I was going to be, but not enough to get the property. But anyways. It doesn't make particularly good money. You can see here the monthly rent, $2,250, is not very high. And that's because I was basically factoring 2 units worth of rent because that old guy is not paying market rent. He's paying way below market rent. He's old. I don't know about you, myself. I didn't want to buy the house and kick this old man who's lived there for 30 years out, on the streets or into the world or whatever. I'm pretty cold and I'm pretty willing to kick people out. You're not entitled to my property, right? But at the same time, I mean, if a dude's lived somewhere for 30 years, like, and he's like old and retired now, like it's one thing, you kick out a 45-year-old or something, like, okay, you're 45, go figure out your life. But you're gonna kick out like a 70-year-old. I don't know. Anyway, I didn't feel very comfortable with it. So I was analyzing the property from the perspective of, I'm going to let this old guy die here if that's what he wants to do. From the pictures, what it looked like he wanted to do. He's got like his walker and stuff. Like he's an older man, right? So I figured, there'd be a few years, maybe even a decade of not really collecting much rent from this guy because, he's old. And so I was analyzing the property under that assumption. So you can see here, that's where my $2,250, it's not that much money. And yet, because the property is so cheap, it still was going to cash flow, right? And so obviously, analyze it at a slightly higher price, you get down to neutral cash flow. That got me to my 280, and that's where I felt comfortable. Obviously, if you buy that property for, let's say, $310,000, you're in negative cash flow territory for sure, right? And now you're basically in a position where you have to kick this old guy out, right? Because it's now costing you money every month for him to live there. And I didn't want to put myself in that position. I don't think... I don't know. There's just something about that I really don't. I myself don't like, and I don't have any judgments for the people who do it. I mean, it's a dog eat dog world out there, right? So it's not my place to say, and certainly, maybe that gentleman should have taken better care of his own finances. He wouldn't find himself in that position where he has to live at the whim of some landlord. Some landlord who, mind you, changes for the price of $300,000. Like, it's one thing if you live in a building that costs $20 million and it changes hands. Okay, what can you do about that? But in a little building, it's $300,000 building. You got to know you might end up with in not a great situation, right? But obviously, 30 years ago, he probably didn't think of that, and that's where my sympathy for him comes in. But anyways, I'll show you this property real quick. So this was 194 Dell. This was in Sudbury. And you can see, obviously, the mortgage payment was relatively cheap. The taxes are, well, low compared to GTA taxes. Pardon me. The insurance and utilities are all an estimate. Property management, of course, that's the rate that we pay. The vacancy rate, I bumped up a little bit because I figure this property, it'd be the one bedroom where you'd experience the most turnover, probably. And so those tend to be just slightly more vacant. So I put a slightly higher vacancy rate than what is actually in Sudbury. Tenant consideration and water heater rental. This has a water heater we had to rent. And that got me to my cash flow. Didn't cost very much for the property. And this property, let me just see here real quick. This property was analyzed at 2% interest rate. So you can tell this was analyzed about a week and a half ago or so. And that's, again, what I'm saying, right, is there's a margin of error already built into everything. So in this property, when I'm saying it's cash flowing, this was in a market environment where I could get a 1.75% mortgage. Okay. So I could actually pay less for my pity and still have cash flow here. Right. Obviously, is there an upper limit on these things? Yeah. Like, for example, if I just take my pity, to reiterate something I've said to you before, if my interest rate, not the bank rate, not the overnight rate, right? These are things you have to understand, is that the Bank of Canada is raising rates that you do not pay. Those are the rates that the banks pay. And the way our money system works, well, it's a mess and we don't need to get into it. But anyways, those are not the rates that you pay. Now, in Canada, at least in years gone past, maybe things have changed under the last 6 or 7 or 8 years of government leadership. But in years gone past, Canada has been world famous for our banking system. Canada has had one of the best banking systems in the world, has done for quite some time. The bankers in Canada were always very, very conservative. And they weren't particularly fond of the government's guidance, and they didn't really listen to it very much. To the point where there have been periods in Canadian history where the Bank of Canada has raised interest rates, and the banks have said, no, we're not raising them. They'll just ignore them because they're in a financially strong enough position to do so. I don't know if that's what's going to happen this time. I guess is not, because I think a lot of the banks want the interest rate increase for the same reason that a lot of investors think there should be an interest rate increase, because the market is currently distorted, and that's dangerous for the banks because distorted markets make it harder for them to predict how their investments will perform, right? So we will have to see. But if you had an increase on your effective interest rate, right? So again, that is if you have a mortgage at 2% and it increases by 100%, you now have a mortgage at 4%, right? And that is possible because the government of Canada caps the increase at, I can't remember if it's 2.5% or 3.5%. Look into it for yourself. This is not an investment advice, right? It's the Bank of Canada thing. All right, sorry, the interest rate thing. Look into it yourself. But my understanding is that there's a capped increase on even open mortgages in Canada. We don't allow the bank to just increase you to 10% if you had a 2% mortgage. It doesn't work like that. But let's just say we double your rate, which is possible. If you had a 2%, it is possible for it to double to 4%. That is completely allowable within the Canadian rules. That would mean my mortgage payment would go from $723.35 to $1,470. Is that right? No, $1,446.70. Sorry. Right? And now $1,446.70 is double. Well, obviously, since that's an extra $723 in expenses on the property where I'm cash flowing $400, I'm now going to be $300 in the hole. Right? And obviously, the mortgage on this property is very, very small. So the relative cost is fairly small. Right? It cost me an additional $723. I've been looking at some properties in the GTA, like $1.5 million properties, that kind of thing. And if you have $1 million mortgage and you have a $5,000 a month mortgage payment at 2%, and the interest rate rises to 4%, and you now have a $10,000 per month mortgage payment, you're gonna end up on the water most likely, right? That's an extra $60,000 a year of expenses. That's gonna hurt you, right? And that is something to begin to prepare for as we see this first initial interest rate move. Well, actually, no. There's two things we need to understand about interest rates and central banks and what is happening with the government specifically. You can graph low interest periods where central banks are buying a lot of assets against times when the governments of those central banks are waging war. So, for example, during World War II or World War I or the Korean War, we would have seen low rates and the Bank of Canada buying up assets. Same with the Federal Reserve, same with the European Central Bank didn't exist, but whatever, the various banks of England and Germany and France and etc. That's what countries do. Why do they do this? Well, it's pretty straightforward. War is a very unpopular thing. People don't really like wars. If you've ever wondered like how the events of history have occurred, and I think some of them we've gotten an eye-opening firsthand look these last few years, but for others, especially the war and the conflict and stuff, people wonder how these things happen. Well, people don't like war very much, and war is very costly. And of course, the government likes war. They are one of the few groups. The government and banks really like war, always have. Everybody else pretty much hates it. And the government and the banks, they collude to have wars, essentially. The banks like wars because they get to lend money to the government and they get to make money on it. And it's like the best loan that they can make, because when you lend money to a business, that business might go out of business and you might lose your investment. But when you lend money to the government, you've just enslaved an entire country worth of people. How are they going to get out of that debt? Is the country going to go bankrupt? Like, Canada can theoretically go bankrupt. We could theoretically not pay our debts. But first of all, the number one group of people we'd be hurting if Canada stopped paying its debts are Canadians, because the majority of people who hold Canadian debt are Canadian bondholders, right? Same thing with the States. In any given country, the majority of that nation's debtors are its citizens, right? So not paying the debt is not a great move, right? Like, Canada owes less money to all of the banks of Canada than it does to all of the citizens of Canada. It owes way more money to the citizens of Canada than it does to the banks of Canada. So they've made this really crazy, safe investment, lending money to the government, because they basically can't walk away from the debt. And so what they usually do is they will collude together. The government will steal money from its citizens by printing the money with the central bank. And then they use that money to go to war. And they use that money to finance their war by borrowing money from the banks, who often are getting the money from the people in the form of deposits. And then they use that money to finance the war. And so a war that would have been really unpopular and would have bankrupted your country in like a year is able to drag on for 4 or 5 years, because you are able to steal people's savings and they don't realize it, right? And so that's pretty much what's going on. And so that's an additional layer of pressure on our central banks to keep interest rates low, right? Because the pressure is now there that the government is, in theory, assuming that they're going to get involved in the conflict, which who knows? I'm kind of betting that at least Canada probably won't, but we'll see. They're going to want to spend money, right? Even if we are not involved in this conflict at all, our government is going to want to spend more money on national security or defense or whatever euphemism that they're going to use for increasing the military budget. They're going to want to do that, right? And so there's going to be a lot of pressure, downwards pressure on that interest rate. And so what's going to be very, very interesting for investors, right, is to see this one thing in isolation. It's not that interesting. It doesn't tell us that much. It certainly doesn't hurt us very much. It doesn't have much effect. The biggest short-term effect you're going to see is a slight decrease in housing prices, because people can't quite afford, right? A lot of people in the market, and they're stretching themselves to the max. And those people now, their max is a little bit shorter than where it was. If you're an individual like myself, and I'm not tooting my own horn here, but I hope that you are like me, right? Everybody who's listening to this seminar is at least somewhat like me, because you're interested in real estate investing, you're interested in being better, you're interested in growing and learning and doing this quote unquote right? then you're not super concerned. This isn't really affecting you. You leave enough margin in everything that you're not worried about it, right? But what will become interesting is to see what trend emerges, right? This is one data point. If 3 to 6 months from now we get another interest rate increase, that becomes another data point that starts making the trend clearer to us that perhaps, okay, the bank is serious. If we see 3 to 6 months from then, we get to a third increase and we see, okay, no, they're committed to doing this, then we will know at that point that the Bank of Canada is actually serious about controlling inflation and that they're actually going to take it. None of this should happen because these things should not be centrally planned, right? As I pointed out at the start of the seminar. There should be no Bank of Canada setting interest rates. Interest rates should be set by individuals and what we're willing to lend at. And if they were, as you'll know if you've tried to get any private money, the interest rate is not a 0.5%. It is not a 1%. It is not a 2%. It's probably not even a 3%. It's like a 5 or a 6%. That's what the interest rate should be in a free market. But we don't have a free market right now, right? And obviously you can imagine, right? Like, could you imagine if you could get 6% on your savings account? You maybe wouldn't be here listening to me. I don't know, right? So it's kind of interesting to see how you distort the market. It has all sorts of unintended consequences, and this is something that we do a very bad job of teaching people. I think when you're in high school or whatever, you get your like introduction to economics course, and they're teaching you like how does the economy work. It's because they're teachers, and teachers generally know nothings, but they'll approach you and they'll teach it to you like, oh yeah, the economy is about math and it's this and it's that and here's a graph and people argue about things, and it's like that. All those things are true, but none of that's really the interesting stuff of economics, because there are some things that we do understand. We understand them like we understand, electricity. Like these are scientific. They're not political statements. They're statements of fact in the world of economics, and yet they're completely ignored, right? And how a market economy works, what an interest rate is. These are things that I wish people had a better grasp of, because we allow ourselves to get confused about what's actually happening in the economy. And we, of course, allow politicians and other people to lie to us and to distort things. And that, it's bad. I mean, it's really, truly, it's kind of sad. I'm going to leave you with this note, and I'm going to call it quits here. I saw this thing. Actually, I might have it on my computer here still. I might be able to share it with you directly. Global news. Yes, I do. So here is something about, this is one of the articles I was just confirming with the rate hike amount, right? The 25 basis points. And there's this clip here on the sidebar, and I thought, for me, this was so ironic. It says, Russia continues crackdown on media and protests amid Ukraine invasion, right? Media, protests amid Ukraine invasion, from Global News. You see, our media has a problem with the Russian media trying to separate disinformation from information. And specifically, while the Russian Politburo said their stated goal was to make sure that the Russian people are protected from misinformation about the conflict in the Ukraine, our media is of the opinion that rather than being protected from misinformation, they're being censored. Now, this is a very ironic take from Global News, an organization that accepted millions and millions and millions of dollars from the Trudeau government for the last 2 years to broadcast Canadian propaganda, and who were completely behind the idea of using fact checkers to debunk information that was being released to the Canadian public, which they claim to be incorrect, erroneous, or otherwise false. Right? The irony is extremely thick to me. Now, I don't know. Maybe Putin is censoring his people. Wouldn't shock me. The Russians aren't exactly known for their free press. The thing that shocks me is that Canadians are foolish enough to read something like that and not realize that, like, Russia is not different from Canada. Russia is a free market economy. It's not an entirely free market economy. And yes, it is descended from Russian communism, but Russia is more or less a free market economy. And there are private individuals who own those media entities, just like there are private individuals who own the media entities here. And why is it that when the media entities there have a particular line or message that seems to align with the government and what the government wants, that's propaganda and that's censorship? But when our media has a message that seems to align with what our government wants, well, you're an idiot and you're a bigot and you're a this and a that, whatever it is they're calling people, for believing any of those things, right? Oh, look at that. Speaking of statistics, there's another statistic. Breaking news. There's a bunch of people in COVID cases because, of course, Ford announced the other day that we're going to get rid of the masks. And so, therefore, we're going to have to ramp up the hysteria again so that we can get away from getting back to sanity, right? Anyways, I think I'm going to stop there. Because I could go all morning and talk about some of the insanity, but I don't think it's necessary. Interest rates, to conclude, interest rates are a distraction. I think I said that to you last week about Ukraine. I'll say it to you again this week about interest rates. They're a distraction. Now, it's not to say you don't need to pay attention to them, right? Just like it wasn't to say that what was happening in Ukraine wasn't happening or isn't something that you should be aware of. It is probably happening, and I don't see how awareness really helps, but ignorance never helps. So, nothing wrong with being aware. But understand that the goal of it is to throw you off track, essentially. That's the goal. It's not that specific or that personal. It's more in a very broad sense, a very like statistical kind of sense that just like, if this throws off 30 out of 100 people, it's doing its job kind of a thing. But that's its goal. Its goal is to disorient you in the world so that you feel like, well, let's put it a different way. The orienting reflex is one of the most basic in all animals. Human beings have it. Cats have it. Dogs have it. Any animal you can think of pretty much has it. Did you know that squirrels cannot die from falling? You could throw a squirrel off the CN Tower, it would survive the fall. A squirrel's terminal velocity is lower than its lethal velocity, right? So the speed at which it needs to be going to hit the ground and die is higher than the speed at which it maxes out falling, right? Because you have a maximum fall speed here on the Earth. That's how gravity works. And the squirrel has an instinct, this orienting instinct. If you drop or throw, or if the squirrel jumps off of a high obstacle, a squirrel will immediately look to the ground, and then it will rotate its body in midair and orient its belly to the ground. They will always do this. It is their instinct. Cats have a similar instinct, and cats similarly are hard to hurt from fall damage. That's their orienting instinct. Humans have it too. Now, obviously, we don't fall, or we do fall, but we go splat, so we don't have that orienting instinct. But we do have the same instinct. It's one of the reasons why sometimes you will be sleeping, you'll have a disturbing dream or something that kind of bothers you, and you'll wake up and you'll like jump out of bed and you'll be looking around, right? That's you orienting yourself in the world. It's an instinct. You can't really help it because that has helped our ancestors to survive when you were sleeping and maybe there was a snake working its way into your nest or your bedroom or what have you, right? Or you were otherwise under attack by some sort of animal or creature, and you had to get up and quickly orient yourself in the world and take action, right? Orientation is it's very instinctual because you can't take action until you're oriented. That is, let's say you're in a cave with 6 or 7 of your loved ones and there's a snake. You can't just get up and start throwing fire all over the place. You're going to burn your loved ones. So you must first get up, orient yourself, find the threat, the snake, and then dispose of it, right? So orientation is the first step in taking action. And it always is. And you'll find yourself, this happens all the time. You have to orient yourself before you do lots of things, right? If you get up in the morning, right, you're maybe tired, your eyes are a little blurry, you just dragged yourself out of bed, brush your teeth, whatever. Now you're getting in your car to drive to work. And sometimes you need to sit down, you need to take a second, right? Just relax, settle into your car. Remember that your mirror is over here and your rear view is there. You orient yourself before you take action, right? Because we all have this orienting instinct, right? Disorientation, right, stuns you. It stops you. This is what we have weapons for this. It's called flashbang. It's called stun grenade, right? It's called a flashlight dazzler. right? I don't know if you've ever seen the police. They'll have like shotguns. They'll have a really bright flashlight on the end of the shotgun. And the purpose of that flashlight is to dazzle you. That is, if we're doing a night combat operation and I shine a really bright flashlight in your eyes when your eyes are adjusted for night vision, then you will become dazzled. You cannot see, right? And once you can't see, you can't orient yourself in the world. So you can't take action, right? So this is an effective tactic, because if we're in a combat situation and I dazzle you and now you can't see for a few seconds, I now have a few seconds to take action where I don't have to worry about you retaliating against me. Same thing with a flashbang, same thing with et cetera, right? So disorientation is a very powerful weapon. It's a particularly effective against people because we're very thoughtful. So it takes us longer to orient than it takes, for example, for a squirrel who they don't think about it at all, right? And so understand that you live in a world where, for better or for worse, right, there are many, many forces who are interested in keeping you disoriented, right? As I said to you the other week, you are powerful beyond belief, right? Remember that the Queen of England, same blood flows through her veins as flows through yours, right? The only difference between her and you is that her ancestors a long, long time ago had the will to take it, and your ancestors a long, long time ago either didn't or they did, but they lost, right? That's the only difference between you guys. And she knows that. Her and the people like her, anybody who's in that position of power understands that really they could be replaced tomorrow by somebody else. And the only thing that keeps that from happening is that the other people don't believe they could take their place, right? And the powers that be are very, 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 very invested in making sure that your average person does not believe that they could ever do those jobs, because if they did, they might start to question why the jobs are being done so poorly, and they might start to replace those people. And that has happened throughout human societies, throughout history. It is a thing. So understand that the disorientation, some of it is an accident. Some of it is just a happy accident in the world. Obviously things happen. They're scary. They disorient us. There's nothing nefarious going on. There's no there or anything like that. But also understand that it is great when people are disoriented. It's not just great for the powers that be, it's great for business too, right? Because generally speaking, disoriented people are afraid people, and afraid people tend to deal with that being afraid with consumption, right? You can reassure yourself by consuming things. Maybe you consume your favorite food, or you consume your favorite entertainment product, right? People are more and more consumatory the more scared that they are, right? They'll use up more resources, which is of course great if you produce movies, or if you produce food, or you produce whatever other crap that people buy, right? Video games, whatever things people seek comfort in, right? So there's a lot of factors at work, and I'm sure I haven't given you an exhaustive list, and I'm sure there's lots of things I've never considered that are also at play. But we do need to understand that there really is this orientation towards disorientation, and that stops people from taking action. And you've been a victim of it. Like, you 100% have been. I don't know when or what story or what thing reached you, but I almost guarantee at some point in your life you've been disoriented to the point of inaction. Maybe you currently are. Maybe that's where you stand right now with real estate. Maybe with something else in your life, right? And really, we all need to understand that, like, there's not much you can do, right? But reach your hand out, grasp for the wall, and orient yourself, right? And try not to pay attention to those things that are disorienting you, right? Don't look bright flashlights in the eye at midnight, right? These are the good pieces of advice, right? So, anyways, again, thank you for your time. I hope that was helpful, that was insightful, that you got something out of it, not just in terms of knowledge, but in terms of insight. And hopefully it's the kind of insight that you can take action on. It's hard to believe that it's March the 6th already. We're into the third month of the year. And I hope that you've been taking action, because that's almost a quarter of the year already gone, Anyways, there's lots of time to take more action, though. So get to it. And hopefully I'll see you next week. And I don't know what happened with the email, so you may receive some emails that I tried to send earlier, and they may come later. I'll do my best to make sure that's all fixed for next week. Thank you again. Have a great day, and enjoy that beautiful weather, because it looks beautiful anyways. I have to see what it feels like.